Good morning, traders. Forex market, here we go. We got the New Zealand Swiss today under the microscope because the situation here became imminent. We're actually just a tip away from pulling the trigger on this one right after this video. That's what we're gonna do, and I'm gonna show you exactly what we feel about the situation, and I'm gonna lay out our game plan. So you already know we've been following up this one for a long time. In fact, we got super interested about the New Zealand Swiss when we saw this phenomenal reaction on that 57.19 level, which sat here for months, right? We knew that was a huge support, and when price engaged, it pulled back as if it touched a wall of fire, right? Remember that huge spike? That was the height of the pandemic, by the way. But right after that point, price started to turn around, which was quite expected. I mean, we've seen that huge touchdown on 57.19. The next step naturally was to turn back up, and that's exactly what happened. But here's where it becomes interesting, right? Because price on its way up. Now, I want to refer you to the blue system, all right? Disregard for a moment about the black lines. The black lines here actually belong to a higher time frame system, which at this point is a little bit, well, it's not relevant. Let's just say that. The blue system here is wide enough and big enough to work with. And when price was turning around, right, it hit that bottom support here of that blue system. It was supposed to go straight to the mid-low key level, 63.92. Right now, we still believe it's on its way. I mean, it definitely went straight towards that area, but it found a strong resistance in the form of 62.73, which, like I said, it's a different system, but it's also a valid key level. In this case, it was a resistance level, and what we saw was a bit of a pullback, right? Which we believe. We highly suspected that was a technical correction for this upside segment. The first upside segment, that was a technical correction right here, right? It wasn't like a full-fledged downside reversal. So that's just the first technical element. Well, actually, it's the second. If you think about it, this was the first technical element, a bullish technical element that supports our conviction. The fact that price hit that, say, 62.73 and went down without hitting 63.92, it's a second element, right? Supporting a bullish conviction here. Now, let me show you a third technical element. Really interesting stuff. The 59.12 here, you see this blue dotted line? This is actually a Fibonacci 38.2, right? The first major Fibonacci correction level, 38.2, after an ABC correction. Right? Just measure yourself from the bottom here all the way to the top, 38.2, boom, right on the money. Price just reached, right, slightly touched and started to turn back up. So that's a third element supporting our bullish conviction here, suggesting that this is indeed just a technical correction, nothing more than that. I mean, you can also add to that the fact that it's an ABC type of formation, and you can call it the fourth element if you want. But let me show you the real fourth element here, which we believe is coming from the daily chart, and that's it. I mean, that's it. That's all we need to pull the trigger, guys, because we thought that in the last let's say week or so, we thought price was going under a very local technical correction, which was going to last just a few days. So we prefer to stay on the sideline and wait for the right moment to strike. Right now, we think this very local correction is probably over because price had already started to turn back up, already produced 2 days, and I'm not talking about today, which is also positive for now, but it already produced 2 positive days, right? Yesterday and the day before. And mind you, yesterday was actually breaking above the 200-day moving average. Now, 200-day moving average, it's not a super strong technical element. It's actually a weak element, but it's still an element that we should be considering. And price just showed resiliency by breaking that up, right? So that's enough. I mean, I think that's enough for us to want to get engaged here, to want to participate in what seems to be price coming back up. Now we're going to be addressing this one from the short-term cycle, right? So we're only taking this to 62.73, which it proved to be a stiff resistance before when it broke that positive momentum last time. So there you go. That's the level we're going to be aiming at, 62.73. It's a short-term type of trading opportunity where we're going to try to catch about 170 pip. Right after this video, pulling the trigger, placing stop loss level around 59.50. We're going to give it some room, and let's see how it goes. We'll be back to follow up and keep you posted, as always. That's about that for this one, guys. We'll be back in the next video. Take care.